All right, guys. Yeah, as promised, we are happy to have the CEO and Chief Global Strategist of Euro Pacific Capital, Peter Schiff, back with us for a second time on the show. It's great to see you, Peter. We appreciate your time as always.
Sure. Thanks for having me on. I had the time wrong, so I had to rush in here.
No worries, no worries. Thank you for taking the time. A lot to talk about. A lot has happened, obviously, over the past not only week, but months. This year has been full of promises, I guess, that have not been fulfilled as far as what has come from the government in the U.S. and this policy making that continues to be the conservative side, to say the least. Give us your thoughts here just in general. I want to dig into the jobs report going back to November. I want to talk a little bit about the last two CPI prints now going back to the downside. But give us your thoughts overall here coming off what happened yesterday.
Well, I think Powell continues to, whether it's delusional or just wishful thinking or, just propaganda from the Fed, but he's in denial of the tremendous problem that the U.S. economy is in, and probably because the Fed is one of the main reasons that we're in this situation. But there's really no way out, because the Fed for the last decade or so has flooded the economy with inflation. I mean, inflation has been the deliberate policy goal of the Fed. The Fed has tried to bail us out of every other problem by creating inflation. And inflation showed up in the stock market, in the real estate market, and nobody really had a problem with it because people thought they were richer. But now the inflation has moved into consumer goods, and that's where it's going to stay. And consumer prices are headed much, much higher. And the rate hikes that we've seen thus far are too little too late to make a difference. The Fed is way behind the curve when it comes to quantitative tightening. They've barely shrank the balance sheet. It needs to shrink a lot more. But the problem is the economy is now so levered up based on the fact that the Fed left rates so low for so long that you can't restore normal rates, let alone the restrictive type of rates that would be needed to rein in the inflation, without creating a financial crisis that's on an order of magnitude greater than what we had in 2008, except we can't have any bailouts. So we have to allow the collapse to happen, which we didn't do in 2008. So it means stock crash, real estate crashes, bond crashes. We have a lot of companies going bankrupt. We have government slashing spending and defaulting on a lot of commitments, like paying benefits to people, Social Security, Medicare. A lot of commitments have been made by the government that it can't keep, especially if the Fed is committed to reducing inflation.
You had a great conversation recently on another show talking specifically about the jobs number and talking specifically about how we saw that tick back to the upside back in November. It was 263,000 versus 200. The versus doesn't really matter, but talk a little bit about why that is, why we're seeing still so much underlying strength in the labor market when Fed Chair Powell is specifically pointing to needing to see that weakness in the labor market before he can wave the checkered flag.
Well, first of all, a weak labor market is not going to bring down inflation. It will actually end up exacerbating inflation. But we don't have a strong labor market. We have a very weak labor market. The jobs that are being created are pretty much all part-time jobs. And the reason we have all these part-time jobs is because people who currently have full-time jobs can't pay their rent. They can't put food on the table. They can't pay for their electric bills or gas for their car. And so people are moonlighting. People need second and third jobs because the job they have doesn't pay enough. Now, if we really had a strong jobs market, one job would be all you needed. The fact that so many Americans need several jobs is, a function of how weak the job market is. In fact, you can look at the number of young people, the percentage. You have almost 50% of people between 19 and 29 that still live with their parents. I mean, this is, the highest we've had, I think, since coming out of the Great Depression. But the reason that so many young people can't afford to move out is because they don't have a job that pays enough to pay the rent. So that is a weak labor market. And, I think some of the jobs are going to retired people who can no longer afford to be retired. because their incomes have been eviscerated by inflation. And of course, when I'm talking about inflation hurting people, it's the government, because the government creates the inflation. It's like a tax. So we only have inflation because of government spending and Fed money printing. It's not something that just naturally happens in the economy. In a normal free market economy, prices go down every year, and that's a good thing. When they don't go down, when they go up, it's because the government creates inflation, and we pay those higher prices in lieu of taxation, but it all goes to finance government.
And on that note, I want to get your thoughts here on what we heard yesterday in the Q&A portion of the press conference from Fed Chair Powell, in that he pointed specifically to services now, and the inflation surrounding services staying high. Not only is it high, but staying high as we're seeing other prices come down. As you were saying, I mean, you know, go to a grocery store even, the price of goods is still on the way up, but yet they're pointing to now services being the problem, not products specifically.
Well, first of all, prices aren't really coming down. I mean, maybe some prices aren't going up as fast as they were a few months ago, but that's only temporary. But I think you're seeing certain prices maybe coming down, like maybe there's some companies going out of business sales, and so they may be marking down their products. But once they're out of business, then what happens? You know, once we deplete a lot of this inventory, prices are going to go up a lot more. Now, I think real estate prices are starting to come down finally, but that doesn't mean that buying a house is cheaper. It's actually more expensive because the mortgage rates have gone up so much. But of course, when you buy a house, it's not just the mortgage payment. The insurance costs have gone through the roof. Maintenance costs, utility costs, you know, the other costs associated with home ownership have moved up dramatically. So even if the price of the house goes down, the cost of living in it is going way up.
He mentioned a 5.1% terminal rate as far as where they want to get to. I'm going to ask you whether you think that's where we should be or where we need to be. And I know what your answer is going to be, but I mean, at 5.1, we're at 4.5 now. What does that do?
Well, obviously that's not high enough. I mean, I wouldn't lend money at 5% with inflation. You know, I think it's at least twice that high, but even the government's own numbers are 7%. And so I'm not going to make a loan to lose money, because if I'm going to lend somebody money and they're going to pay me back in dollars that have lower purchasing power than the ones I loaned, I need an interest rate that's high enough to compensate me for that loss and the taxes that I'd have to pay on the nominal rate. So rates are still much too low, given how high inflation is. And of course, you know, we need savings. If we're going to reduce inflation, we need people to spend less and save more. Nobody is going to save when the rate that you get on your savings is less than the inflation rate. And so, you know, the rates are not high enough. I mean, they would probably have to go into double digits to actually be effective. But the problem is the country would completely implode with that type of an interest rate, because we have too much debt. So we'd have to allow a lot of the debt to go into default. A lot of people would lose money. It would be a very painful adjustment. But unfortunately, what's going to be even more painful is runaway inflation, which is what we end up getting because the Fed doesn't have any stomach for that pain.
We heard a quarter or 25 basis point hike could be on the table as we go into February next year. I want to get your thoughts, first of all, on what happens in February, because now we have, you know, a month and a half of time here to see what happens on the economic front as far as data is concerned before they meet again. So part A, and I guess part B is simply, what does that do to the dollar here? Have we seen the highs finally on the DXY?
I think so. You know, the dollar's rallying today, but I think it's, you know, broken the momentum that it had. And, you know, other central banks are raising rates as well as the Fed. And so I don't think the Fed has, you know, that advantage anymore. But we have, you know, huge trade deficits and budget deficits. I think the fundamentals in the U.S. are much worse than a lot of other major economies, and it should weigh heavily on the value of the dollar. So I expect the dollar to fall, and that's just going to worsen the inflation problem in the United States, because the strong dollar has insulated us somewhat. As bad as it's been, it would have been worse if the dollar had not gone up as much as it did against other currencies, because that helped control the price of our imports. But as the dollar loses those gains and starts to fall, then the cost of imports really starts to rise. And that's going to bleed into the CPI because, most of what we buy, at least the stuff that we buy, is imported. And it's going to cost a lot more as the dollar goes down.
Heading into next year here, I checked this morning, the PE ratio for the S&P 500 as a whole around 19 now, multi-year lows on that aspect. As far as investors are concerned today, what can we be doing today to help with, what seems to be an unavoidable recession that's coming?
Yeah, well, we're already in a recession. I mean, it's more likely a depression that's coming, an inflationary depression. I mean, this is a real economic disaster that is the consequence of more than a decade of reckless monetary and fiscal policy. And we're going to have to pay a huge price for those mistakes. You mentioned the stock market. Of course, it's dramatically overvalued. It's priced for 0% interest rates, but that's not a natural rate of interest. Interest is the price of money. And in countries that have a lot of debt and minimal savings, interest rates should be very high. And that's what's going to happen. We're going to have very high interest rates at some point in the country. And everything that was built on the foundation of low interest rates is going to implode. Powell yesterday said, nobody knows what's going to happen. We don't know if we're going to have a recession. We don't know if it's going to be mild or severe. No, we know what's going to happen. We saw 2008. We know what happens when you have a lot of debt and then interest rates go up. You have a financial crisis. That's what we're going to have this time, except we have even more debt, so we're going to get an even bigger financial crisis.
All right, I want to shift gears here and talk a little bit about where we can be looking for some possibilities of upside right now. If you go back to November, China's Golden Dragon Index was up 42% on the month, which was the top performing index for the month of November. The main index over in Germany was 28%, I think it was somewhere around there, was number 2. Can those types of gains outside of North America, the biggest economy in the world, obviously, continue at this point?
Well, we're going to see some rather spectacular returns on non-U.S. investments for the remainder of the decade. How they end up finishing the remainder of 2022, it's hard to say. But I think the emerging markets, and that would include China, but I think they're going to do very well in a weak dollar environment. But there already are some bull markets. Look what's happening with precious metals. Silver's had better than a 30% rally off the low. That's a bull market based on the way anybody wants to look at it. You've seen mining stocks up 30 to 40% from their lows over the last few months. I think they're now in bull markets. So there's a lot of potential there. In fact, the portfolios that we manage, I haven't checked today, but before today, our main strategies, our value accounts and our dividend payers accounts were all positive on the year. So despite the fact that the markets have been killed, our stock strategies, which are 100% long and pretty much fully invested and not short, we're still positive on the year. So if you're investing in value, if you're investing for dividends, I think there's still a lot of upside, especially outside the United States. Our foreign stocks have gone up this year despite the headwind from a rising dollar. If the dollar had been stable on the year, just gone sideways, our returns would have been double digit, but the returns were diminished by the dollar strength. But I think in 2023, they will be greatly augmented by the dollar weakness.
We've seen impressive numbers right across the board, regardless of what market outside of North America you look at. All right, I want to get your thoughts here on crypto markets, on this FTX mess that has occurred over the past week and continues to play out on a daily basis. Say what you will about SBF at this point, but 115 years of a prison sentence says a lot about not only the industry, but the business itself.
What do you mean? He was sentenced to 115 years? How did he get sentenced? He hadn't even been extradited.
They're proposing. That's what he would be facing. But let's talk a little bit about, a lot of people have taken this as an opportunity to say, okay, Bitcoin's over here, and then crypto's over here. Should we be looking at these two things separately?
No, I mean, if you're going to say that a Bitcoin is not crypto, they're all the same. You know, whether Bitcoin will be the last refuge as all the 20,000 plus tokens come crashing down, maybe Bitcoin will crash more slowly than the rest, but it's all going down. I mean, it's all the same thing. You know, there is no value. I've been saying this since the beginning. There's no value in Bitcoin. You know, it's just worth what somebody's willing to pay for it. And why did people want to buy Bitcoin? Because they thought they would get rich, because they thought somebody else would pay more. Well, you know, it's a greater fool theory. You eventually run out of fools. And it's clear that that's happened. I mean, the bubble has popped. Bitcoin has gone from almost 70,000 to now, what, 17,000-ish. But the only reason it went up to 70,000 was all the fraud, like the stuff going on at FTX and all these other companies that have already gone bankrupt. It was all leverage. It was all pump and dump. There was massive amount of not only borrowed money, but stolen money that was used to hype up these coins, to advertise crypto. So the whole thing was literally a house of cards. It's imploding. You know, I feel bad for people who still don't understand, and they're just going to go down with this ship. They are going to hodl till the very end. I mean, they're going to hold their crypto until there is nothing left, and that includes Bitcoin. It is just going down. You know, I don't know if it's going to hit zero in the next couple of years, but it's going to get pretty damn close. It's going to feel like zero.
Is there a reason then why that hasn't happened yet? Is there a reason then why we're still at 18,000, we're still at 17,000 for Bitcoin when all these companies are essentially zeros?
Yeah, look, I mean, people are.
Oh no, did we lose him? All right, we'll see, guys. We'll see if we can get Peter back here to wrap up.
I wanted.
Yeah, that was the answer I wanted too. I'll throw it back over to you guys now. We'll see if we can't reconnect.
That was the right question, just the wrong time.
Once, I'm telling you, man, it's like once the question, it's like, this, okay, here we go. This is it. We just had a great interview. This is the one. Let's hear the answer to that question. And then it gets shut down. It's just like yesterday. YouTube didn't want us to be on at the end of the day because we kept having those issues and the market was flushing. But I hope we get Peter back. Obviously, I don't know what happened. It could have been an issue with Zoom there. I hope we're able to get him back. Until that happens, let's just go to the market. Brendan will let us know.
Oh, he's back.
Okay, no, he's back. He's back. Let's go right back to him.
I was never gone.
All right, we saw you freeze, so I wanted to make sure we gave you a chance to finish your thought there.
Yeah. No, I was just saying that, look, you know, there are still people that think Bitcoin has value, and they're buying, and there are a lot of people that own it that don't want to sell it. They're holding on. I mean, they're holding it because they think the price is going to go back up, so they still have confidence. They're going to give up. That, you know, people are going to sell. I mean, not everybody. As I said, some people will hold till the bitter end, but other people will sell either because they want to or because they have to. I mean, a lot of people that own Bitcoin and other cryptos are soon going to be unemployed if they're not unemployed already, and they're going to need money, you know, to pay the bills. And if all they got is crypto, well, you know, you can't buy groceries with your crypto or your Bitcoin. They want dollars, so you got to sell. Well, somebody's got to be there to buy. I don't know who's going to buy this stuff. I mean, there's no new money coming into crypto anymore. There's certainly no institutional money coming in. In fact, any institutional money that got in wants out. You can see that by the massive discount that the Grayscale Bitcoin Trust trades at. So there's no new money coming in. There's just the true believers who might want to buy more, but then you have a lot of people who aren't really true believers. They just got suckered in with all the hype. They're going to get out, but there's not enough people to take them out because we've run out of chain in this blockchain letter, or, you know, the pyramid is done, right? That's what this whole thing was. Everything, you know, all pyramids, Ponzi's, chain letters, however you want to call it, Bitcoin and crypto have elements of all three, but that's what they are. I mean, there's no real investment there. There's no real asset there. There's no income. There's no real use case. They're all just, you know, strings of numbers, tokens that people gamble on. People buy them and hope to sell them at a higher price. And that only works until it doesn't, and then it implodes. And we are in the implosion stage right now, but we still have a long way to go.
For years, we've heard, wait for regulation, wait for regulation, wait for regulation. That'll open the floodgates. I mean, FTX, you can count them on, multiple hands now as far as these companies that have blown up. How much has that set that back?
Look, regulation is not a good thing for any industry. I mean, I wish there was a lot less regulation in the investment industry and the security industry. It's really done a lot of harm, all the regulation that we have. I mean, most industries would be better off with less regulation. I think the main reason that the crypto people were claiming they wanted regulation is because they thought that more regulation would sucker in more institutional money. And it was really part of the pump and dump. It doesn't make the system work better, but it may have created a situation where the whales that are trying to get rid of their crypto would have had bigger buyers to sell to if they thought they were protected by government regulation. It's almost like the crypto industry wanted like the government's good housekeeping seal of approval. Aha, you see, we're legitimate because now we're being regulated. They were looking to get that legitimacy out of the regulation. But the regulation is not good for the industry, nor was it needed for the industry. But the problem with the industry is there's nothing there. That's the biggest problem, that it's built on nothing. So it's going to collapse.
Peter Schiff, CEO and Chief Global Strategist for Euro Pacific Capital. We appreciate your time as always. Thanks again for doing this.
Sure thing. Bye-bye.